Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I do have a website, finding-value.com, platinum membership. If you guys need help with anything investment-wise, a lot of commodities, you get to see my portfolio. I'm up quite a bit this year and over the past few years, up a lot. So good for me, I guess. We'll go through Twitter here. I'll give you my financial opinion on the stuff in the market. We'll see the information. It's all commodity stock market related, and I'll give you my opinion here. So let's just dive in, and I'll give you my opinion. If you want to follow me on Twitter, it's at finding_finance, and I do share a lot of stuff on here. So let's go. Game of trade. 7 big companies have wiped out more money than even the central bank could. And what I'm kind of interested here is just look at the central bank liquidity. I think these are obviously highly correlated together. We also see a shoulder, head, shoulder, and that most likely will come back down if the central bank liquidity continues to go lower. If liquidity comes into the market, it seems to be finding these financial assets. Here is the share of the S&P 500 market cap. Meta, Apple, Amazon, Microsoft, and Google heading lower. And then we've got our little energy, the energy that could bottomed in 2020 and starting to really make its way higher. Energy is found in inflation. So energy is the feedstock of everything that is in this world. It could be food. It could be related to products that are built. It is inflation. So energy is the number one inflation hedge. And usually these go opposite. Bull market commodities, bear market technology stocks, and just overall stocks that consume commodities. Here's the DXY. This one's by the Hinster. He drew it across this way, hitting the top there, hitting the top there. And this, well, first he drew this in, and then he projected it up and put it on top of these guys. So the rate of change or the decline rate is the same as this bottom line. Could this be falling down for the U.S.? He's got the U.S. 10-year at 4.2%. This is the dollar index is what we're looking at, the DXY. Could this be a top in the DXY? Very much related to the commodity boom back in 2000s, early 2000s, where this came back lower. I do think it could potentially be a declining dollar going forward, DXY, just like the last bull market for commodities. This is the gold-silver ratio, and I talk about this too. He's got a cool little chart here that is, back to 98. He's got a dotted megaphone pattern, and if you were to look at the megaphone pattern, you would look at this, and then you look at your ratio on the left. Potential 26.5, 28, something like that for a potential gold-silver ratio bottom. Vast outperformance of silver if that were to happen. He's got the 3-wave, wave 1, wave 3, wave 5, all the way down lower. And I think this could happen quicker than what most people can think across the board here for a lot of these stocks. The back half of the commodity bull market moves quick. I think we've done our wave 1. This is our wave 1 here of the ratio compressing. Then you usually get a pullback, and then it's game time for a very large wave. Last time you can see that we came up, we came back up, and then we darted down quite substantially. And I think that's similar setup to the last bull market. And where we are in the bull market, though, I don't think we're necessarily here. I do think that we are earlier than that. We could be more on the lines of this coming back earlier. That's my take on it, at least. This is the U.S. 2-year for yields. And we do have a rising wedge in yields here, which I think he's probably right. in terms of this pattern where yields could fall going forward. Now, if that is the case, where yields come on back down, we need to know why that is. I am a bull on oil, and I still think we're very early, but we could have a pullback in the short term over the next couple of months. That is possible. So that is something to watch. We'll see what happens with yields. Nice, good chart there. We also have uranium. Something special is about to happen is what he says. We've got this parabolic move back in the late 2000s, 2005, 6, 7. And then we came back down in 08, 07 and 08, all the way down. So we are on this big kind of bull market move right now. He's got this pattern here, almost like a falling wedge or a wedge pattern that broke to the upside, did a retest, and now we're moving on this big arc, if it is the arc. But it does look really good. I like this pattern here. I have seen that pattern before. And that pattern is similar to this guy right here. So it'd be like this guy right here is equivalent to this guy right here. This is a larger fractal on the right-hand side, which means the move will be bigger than the last move if this were to move similarly. And I think that it will move similarly. I think that we are kind of right at this stage in 2005, late 2005, early 2006. And we could see a big move higher. So good chart on the Sprott Physical Uranium Trust for that one. Looking at Shabam, it says, against pipeline constraints and shale's heavy decline rates, Appalachia production has now dropped below 2019 levels. The days of unrestrained growth in both shale oil and shale gas are behind us, setting us up for a new oil and gas regime going forward. Invest accordingly. And he's got the oil and dollars. I like it. So 2022 is the red line. This is an MMCF per day. And you can see the red line's dropping here. What the heck is going on here? Is it price related? Is it production related? Is it performance related? That's really what's going on there. What's the question? We have seen some declines in 2022 before, but it looks like it's struggling to go higher. We have had some pretty high pricing, so we'll see what happens. I see volatility, and obviously in 2020, 2019 had a pretty good run there. But is this peaking out? We'll find out. We'll definitely find out. We've got the stock market here. Obviously, I've got emerging markets and DXY. Emerging markets, just a nice clean pattern here. We broke out. We came all the way back down to our support level. Is this going to rally with a weaker dollar? What I did is I got the DXY here, and we are turning back over here, much like we saw with John. And a weaker dollar usually does very well for emerging markets. So the last bull market is this big move higher there for emerging markets than the dump out. So I do think that's going to come at some point with the weaker dollar. Coming up, I've got the SPUT engage. Up against resistance, can we break? I have a simple resistance line going across. We hit it a couple times back in history. And now are we going to engage to the upside and break out of this? If we break out of this, I think we're going to see a very large up candlestick busting on through it like Hulk would. Hulk strong, smash right through the resistance. So that very well could be the case. That's one to watch. Watch Sprott Physical Uranium Trust. We break through this, we could see the uranium miners go ballistic. And I think it's set up to potentially do that. Here's platinum, my boy platinum. Again, we're getting very strong buying pressure. This is on a monthly candlestick basis. We're breaking out of this last kind of chart pattern here, falling wedge. Looks very good. Here's the commodities CRB index. Again, I just like the simple long-term charts. We've got a trend line here, and sometimes they do break a little bit below it before breaking higher. We've got a falling wedge. I like when these things are positioned to the downside. If they're positioned upward, that is a topping pattern. Positioned downward like this, that is a continuation pattern. So we've got the pullback. It's definitely pulling back, and we've broken out of that falling wedge. To the upside, we might have a return move before we head higher. Looks good. Gold breaking out just weeks after financial media claimed the metal was dead. So gold breaking out to the upside. You've seen that on my technical analysis daily updates. It's looking good. I'm going to skip through this one. That's not really ultimately a shoulder head shoulder. Now here's something that's kind of interesting. It says a Luna-esque death spiral catalyst. Withdrawals at FTX.com effectively paused. CEO Sam Bankman-Fried in Telegram message to staff. If true, this can never, ever, ever happen. Not for 1 second. This is why 100% of temporary pauses become permanent pauses. It says FTX FTT token. Look at this thing just falling off a cliff, guys. So I don't know all about this. I'm not a Bitcoin guy, but Bitcoin has definitely got some selling pressure. This is Bitcoin on a logarithmic scale. I just pulled it up. When you look for contraction, what we do is we look for the size of the moves up if you were to minus the pullbacks. And if you were to look at that, you can see a very large move up here. We have a smaller move up here, and then we have a smaller move up here. This is losing steam. It basically did a double top, broke out of its uptrend, and we're getting a little bit more selling pressure here. Now, if this thing opens up, this thing could go down quite a bit. We do have support kind of in this region here at about $8,000, but it doesn't look good from a logarithmic perspective. This is what it looks like without logarithmic. I do think there's a lot more consolidation that can happen here before moving higher. This is the pullback last time, and then it had to consolidate for a while and basically break that downtrend for a move higher. I think that has to go through all of that consolidation again at the bottom there, and it's going to take probably some years before that happens. Scrolling down here, Jim Bianco, this is other brokers, trading shops, and even miners with FTX accounts must have reliable, continuous, and uninterrupted access to their funds. Disrupt that, and the entire ecosystem is at risk. See ETH, BTC, a scramble to get out of FTX is underway. Alameda assets are collapsing. This is Solana token rolling on down to asymptotically approach some very low number. I'll just say that. We've got Grady here. Grady, another one with a breakout of the gold price. He said this should be the final sign. It is game on. It says now breaking out above the blue line as suspected it would. Go gold. Now here's something interesting. With NYMEX natural gas prices continuing to move higher, how much can the U.S. rely on cheap Canadian nat gas imports this winter? Maybe not as much with Western Canadian natural gas storage at record lows at only 75% full. A threat on Canadian natural gas dynamics. This is pretty interesting because this is Western Canadian nat gas storage. Look where the red line is, guys. We're at 75% near record lows during this time of year before withdrawal season. Very interesting to see how low Western Canadian natural gas storage is at this time. This is Tesla on a log. I think he means log scale, not long scale. Is constructing a possible massive head and shoulders top pattern with a target of 104. Patterns often fail or morph, but it is this one. But is this the one that works? A short would be a heck of a trade if this works. So it's at, I don't know, 280 or so, and it could drop down to 104 with a shoulder, head, shoulder on Tesla. This is further evidence that we are basically, I think, lining up for a 2001 type pullback. And it could impact our commodity stock investments. We could go sideways or slightly lower when this blows out to the downside. But I do think that it's going to be positive for that turnaround when we come back up. I think commodities will still outperform and these stocks will underperform. This is GG Penna. Commodities were the strongest performers during the stagflationary 1970s. And this is I think this is perfect. I put ding, ding, ding. Commodities outperform equities as this goes down. It was 11-year trend, a 19-year uptrend where equities outperformed, a 9-year trend where commodities outperformed in that 2000s bull market. We've got an equities outperform of 13 years, and now we're beginning the commodity outperform stage for probably 9, 10, 11 years, starting at 2020. So that's a cycle, guys, and we're starting that secular trend for commodities. I said out here, I said, lots of opportunities still exist in this commodities bull market. You need to know where to look right now. Remember to chase cash flows or potential inflection points into massive cash flow. So companies that are losing money, but will eventually be making lots of money. I said, changing market conditions is what changes the pricing of assets. Inflation and interest rates are a big part of it. Invest now for what the market conditions will be in the future. I said, looking at the markets in the right time frame for big gains is one of the most important things for investing. Too short a time frame and you don't see the big picture, which most new investors miss. This is the symmetry and pivot line are becoming clearer on URA, which is uranium ETF. Look at price coiling just under the pivot line. A reverse symmetry move could follow the purple route. And what he did is he took this guy and he took this side and basically did a reverse. You can see this high is this low symmetry line, and this is what it would look like moving higher if it were to do that. I do think that we're very close to a very big move higher in uranium in general. It says, looks like oil is starting to front run the end of the SPR releases. Game on. This is for oil. I know we had a little bit of a pullback on November 8th, but he's coming out here saying no more drilling. There's no more drilling. I haven't formed any new drilling. Interesting. It says the commodities bull market will be the greatest opportunity in your lifetime to get out of the rat race. Here we have yet one more evidence of where to be. Oil companies breaking out versus general equities. Always know the very big picture. I completely agree. This is XLE, which is an ETF versus the S&P 500. You can see a clear downtrend line that is broken and a big fat ratio breakout against this ratio of XLE to SPY. We're starting to move higher. This is where you really start adding gains for the oil and gas companies in relationship to the S&P 500. And this is going to be a combination of XLE going up and the SPY going down for this to move dramatically higher. That is purchasing power gains where oil will outperform stocks. This is November 6th. Yeah, I think I already covered this one before, but I'll end it there, guys. That's what I'm seeing out on the markets in terms of and what people are talking about on Twitter. So I think it's commodities look very good. It's all game on. And if you guys need any help with anything, again, there's the Platinum membership over there. I can help you out if you need some help. We do have a question and answer session Saturday, 7 a.m. That is this Saturday, 11/12 at 7 a.m. So we'll see you there if you're a Platinum member. If you guys like the content, give me a thumbs up. And we'll catch you next time. This is Finding Value.